Thank you, Bree. Well, our viewers are asking questions about their finances, and here to supply some answers is financial analyst Chad Slagle from Slagle Financial. Great to see you as always.
Always good to be here.
When you're dealing with a 401k, when you're paid in company stock, what percentage of your portfolio should be in company stock?
Well, that's a good question. We talked about record highs in temperatures. Of course, the market is at, again, record highs. So when is the time to take a look at that? Of course, I think what you need to understand when it comes to your 401k and your company stock, in my opinion, you don't want to have everything in company stock. You need to have a diversified portfolio. But I think as you get older, as you get 5, 10, maybe even 15 years before you retire, you want to start de-risking out of that, some of that company stock into some more conservative investments inside of that 401k.
Okay, good advice. Our viewer Betty asks, I have several brokerage accounts. How can I tell what I'm paying in fees for all of these accounts?
You know, this is something that's amazing to me. How many people have no idea what they're paying in fees? I would say on a daily basis, people that we meet with, 80 to 90% of the people out there, the general public, have no idea what they're paying in their brokerage accounts. Now, if I ask you, Kay, what did you pay at the pump the last time that you filled up? What is the average bill a month at the grocery store? You could probably come pretty close. But a lot of people, if I ask them, do you have any idea what you're paying in fees for these accounts that you have set up in the market? 80 to 90% of them have no idea in fees. One way to tell that, of course, would be the prospectus, that big thick book that you get in the mail. The problem is a lot of people don't read those. We recycle them or throw them away. That is one place. But also, I think you need to sit down with your advisor. Ask them point blank, what are the fees that I'm paying for these accounts? If they can't tell you step by step, fee by fee, exactly what you're paying for those accounts, I'm not so sure I would be working with that investor. You want to make sure everything's transparent because this is one of the largest investments that you have at this stage of your life.
And don't a lot of people just assume that's the cost of doing business?
Absolutely.
You know, so they kind of chalk it up to that, but we should be concerned
No question. It's like when you go buy a car, you can either pay sticker price for that car, you can pay invoice price for that car. You need to do your homework and you need to be smart, whether it's buying a car or whether it's investing your hard-earned dollars.
Okay, real quick, a person turning 62 in a couple of months wants to know, should they take Social Security now or wait till they're 66?
It's a good question. Number one, do you need that money now? Can you wait to take it? Are you going to continue to work? If you make less than $15,120, you can still get full Social Security. Anything over that, every $2 you make, you got to give $1 back. You want to look, I mean, a lot of things. You also have to take a look, I guess, your genetics. Do you have long genetics in your family? If your family consistently lives above 80 years of age, then you want to consider delaying taking that Social Security. If they don't, then go ahead and start taking the Social Security early. There's just a couple things to look at.
All right, Chad Slagle from Slagle Financial, thanks so much for joining us.
Thank you.